I want to talk to you about Europe because obviously you've been very involved across Europe. The last time we spoke, you were getting more involved in Spain, Italy, the more peripheral countries, and you made your money, if I can be so crass, on other places in Europe. Right now, the ECB has just begun with a new leader who calls herself not a hawk nor a dove, but an owl. What does it mean for the ECB and for Europe?
Well, I think there's going to be significant change under Christine Lagarde. And she doesn't want to be known as a dove. She doesn't want to be known as a hawk. If you're going to force yourself to go dove or hawk, think more hawk, but she's not going to be a hawk. I think this is what's going to happen. It's going to be a huge sea change for the marketplace, and the market's not pricing this in. In fact, the market has not discussed this at all. I think that when Mario Draghi left on October 31st, he locked in lower rates yet again for a 6-month period of time that takes us through March 31st. And he also embarked upon yet another quantitative easing program to buy yet more and more governments to bring rates negative even further. That's crushing the European banks. The European banks over the last 5 years are down 25%. And if you look at the SX7P, you can look at that index, or you can compare that with the US banks and say the XBE index, and that's up about 45 to 50% in the same time period. So European banks are being punished because every day they have to deposit their excess reserves at the ECB and pay the ECB money, losing money, to the tune of several $7 billion a year, every year for these top banks.
Which has been the case for a long time.
Which is punishing them. So she recognizes this, and she's going to normalize rates next year. She's going to take rates from negative to zero. And with that, you'll see the German Bund go from negative 25 basis points, which traded at a crazy negative 75 basis points. And you'll see that trade at maybe a positive 25 basis points. And so the big story here is buy European banks.
You think
they're underpriced on a price-to-book value basis, on an earnings basis, and their earnings are going to be increasing as they don't have to pay away negative rates to the central bank, which is complete insanity.
Will that be her way of getting the economy back on track, inflation and employment back on track? Because certainly it's not in her mandate to do anything for the European banks.
I think it's just so restrictive to growth when you make the banks lose billions of dollars a year for no reason whatsoever. When you make investors lose money to invest in government bonds. So taking away this insanity that's been existing for the last several years and moving to normalcy is a very positive thing for Europe and the European banks.